Welcome back to Fast Money. We want to call your attention to some price action in the market here. As you see here, the S&P 500 ETF is trading lower by about 0.5%. Futures, we should note, are closed for trading. They open at 6 o'clock. This is moving lower on a Bloomberg headline that President Trump is expected to announce up to $200 billion on fresh tariffs in China. The yen is also moving on this as well. The yen is moving higher against the dollar as a safe haven bid. Again, this is a Bloomberg report. It's the only news organization out with this report so far, but we do want to bring this to your attention because we are seeing that move in the SPY as well as in the currency market. So,
yeah, I mean, listen, I talked about the fact that we have this debate here and this within the market of are tariffs good or bad. Right now, on if this is true, then the market's saying it's bad. The one thing that would get BK all bulled up is that the market reverses on this. If there actually are $200 billion more tariffs and we reverse and start moving higher, then BK would really like this market.
Look, preparing a list for $200 billion is very different than actually going into an investigation. Right. And so this process, folks, is a very, I would just say, involved. And right now we're at 50. If we get to 250, by the way, we're more than half of total Chinese exports into this country. I mean, let's be clear. So, again, I think the president is intentionally conflating NATO and tariffs and all this stuff as he heads over to Europe and has some very difficult meetings with people and showing that he's still playing hardball. And that's what I think. And I think the market also, in terms of positioning and sentiment right now, is in a different place than it was to handle this news 2 months ago.
If we had more tariffs, or if we had tariffs on $200 billion more in goods, again, that would be half of what we bring in from China in total. Right. Would that officially be a trade war, and would that make your breakout on the S&P 500 an elusive dream?
It would make it elusive, I think, at least for the time being. But how about the digestion process? I mean, we see that all the time in this, as we've gone through this whole tariff back and forth kind of thing. This is a huge number, though. I mean, there's no doubt about it. I mean, if it's really that, if that what's being reported is correct, at $200 billion.
Don't you guys think it's fair to say that, the first half of 2018, we saw stock market go sideways. Now, it eked out a slight gain if you're looking at the S&P 500 up a few percent. And that is digesting all the news that we know about these tax cuts that went in place at the end of this, at the end of 2017. So if the back half of 2018 is really digesting hundreds of billions of dollars of global tariffs, there's a significant potential that offsets any of the benefits we were expecting in the back half of 2018 of the tax cuts. And I'll just say this, we're going to see this on guidance, Q2, what's going on here, how people are projecting. And I don't see any reason why the management should be anything other than cautiously optimistic at best.
I want to show the FXI also because we're seeing a move in that ETF, which is the China ETF. That's down by more than 0.5%. And this continues the decline that we've seen in China on the tariff, on the trade war.
It's been a nice bounce in emerging markets in China over the last 4 or 5 sessions. In fact, it really began the day that this stuff became official on July 6th. Emerging markets have rallied 4.5% off lows, where they'd underperformed by 15% against the S&P. 15% underperformance, and in absolute terms, north of 21%. So Pete's right. I mean, look, I think we're all right when we say that if markets actually have to deal with a real $200 billion tariff, that's a very different than, I think, an announcement that there could be a list prepared. And look, the impact, if you want to think worst case scenario, which I think was your question, I mean, I think this ultimately puts about 35 or 40 basis points of additional inflation on the global economy, which I think stocks haven't even come close to pricing in. But I do think prices, Danny said, I think in the second half of the year, some of this, I think a lot of this is priced in, frankly. What we know right now of $50 billion, I think is priced in. I think we've heard it from companies for months. In the same way that I think by the fourth quarter, a lot of that tax got priced in.
So I think that's an interesting in terms of the inflationary pressure on the economy.
It's big.
Right. We haven't yet priced that in, but isn't that more like a supply shock? We were speaking with Alan Blinder yesterday of Princeton University, and he said that would be more akin to oil prices spiking, where it's not something lasting that the Fed would actually incorporate in terms of deciding what,
but again, that goes, are we in a trade war, which is longer term, or a trade skirmish, which is, this is just part of the negotiation process. So if this sticks and we have even $250 billion, then yes, that's going to be, you're going to get a stagflationary environment. If it's a one-time shock, then we probably can get through
I just want to make sure, I keep hearing that how much leverage we have over the Chinese, given how much we import and how much we can actually apply as far as tariffs. I'll tell you that I think the Chinese have a ton of leverage into the fall as we head towards the midterm elections. Look at how they have placed their tariffs, who they're targeting. They're targeting red states. They're targeting. Yeah, so to me, I actually don't expect any short-term fix this summer. I think this is going to go on until where the Chinese have the most amount of leverage. And let's not forget how much we trade with our allies to the north and the south, our border partners here, about $1 trillion, almost double what we trade with China. So to me, this thing is brewing, and I'm not expecting any short-term fix.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.